It's the casual wear part of the segment that's underperforming and causing for guidance to be cut on the sales side, and then tariffs and de minimis causing the margin hit that we're seeing. So it's a sales and a margin story here. They're both underperforming.
So what's the prescription for that? And is the company coming up with a strategy that is appeasing investors in any way?
Yeah, so the biggest issue on the sales side is the fact that they're not performing well on the casual part of the business. They don't have enough newness. Currently, newness in their pipeline stands at 23%, and they want to move it to 35% by next year. So we hope to see more newness, but it won't be until spring of 2026, which means the back half of the year is going to be very sluggish.
That's a long time to wait for investors who have been sitting on this stock and have looked at a 48% drop before today's trading. What's if investors? So let me rephrase this. If consumers are swapping out of Lululemon, going to Alo and Vori, what are investors swapping out Lululemon for?
Well, I mean, look, I'd say the performance side of their business is doing well. So when you say swapping out from the Align leggings perhaps to the Aloes, that might be just broadening the assortment. The real issue is on the wide leg pants, on the casual assortment. That is not trending well. That is what needs to do better. Competition has always been there. It's growing for sure, but it's always been there. Lulu knows how to compete when they have the right product. The issue is they don't have enough new product. It's not coming fast enough, and it won't come overnight. They hired a new AI head to drive innovation. That should help because AI is helping improve design timelines and so much more that we do think they can speed it up. But once again, nothing's happening this year. They'll have a little bit of more new, but it's not enough. Sales in the US are expected to decline. And that's, we haven't seen a decline at Lululemon. I can't remember when.
So, I mean, Lululemon's down, the stock is down 55% this year. Puma's down 55%, Adidas 25, Under Armour 37. Are these performances and stock declines, are they primarily driven by concerns about tariffs?
Tariffs is definitely one concern, but I think that's not limited to just the athletic wear. It's for all apparel retailing. The other is just a shift in wardrobe, right? If you think a few years back during COVID, where did the wardrobes shift? A big part of your wardrobe was comfortable, uh, performance wear, right? We all had the leggings. We were wearing them at home while we were working. We were wearing them out. Today, we're moving into a more structured wardrobe environment, which means that the closets are more balanced like they once used to be. And that's part of the reason why you're seeing underperformance also at the athletic wear companies.
So in the meantime, as Lululemon tries to get its product, its newness, its assortment back on track, it's making up for the weak sales in the U.S. with a lot of international sales. China is a big strong point. Global growth is still there. How much more can it ramp up that side of the business?
There's plenty of opportunity internationally. International is only 25% of Lululemon's total business. China's growing at over 20%, with the rest of international at around 20%. So a lot of runway there across both performance and casual wear. We think that's a bright spot that will remain a bright spot for the foreseeable future.
Poonam, it's early September here, but it's certainly never too early to talk about holiday shopping. What's the expectation in your industry about how holiday shopping will be this year?
I think holiday will be okay as long as there are deals. The consumer is clearly focused on deals, and we think given the current tariff situation, a lot of the inventory was up fronted. So retailers have most of holiday now in stock in their warehouses and also, starting to come into stores. We think the consumer will come for deals. They'll be choosy. They have been choosy all year. So you're looking at the Walmarts, the Amazons of the world that will probably continue to take wallet share.